this is Pam O'Keefe. We're going to be creating a number of reports today for Jason Gallus, attorney at law. We'll start with a balance sheet, and all of these reports are going to be from 2012. So our first one will be a standard balance sheet, 2012 for the month of January. And we want to remove our date prepared, time prepared, report basis, and we're going to be calling this balance sheet number 1. And I'm going to be basically coming back to this same sheet a few times and just making changes and using those to generate the next report. So here's our first one. We want to make sure that we're memorizing these into the right folder. So save in my group. There's balance sheet number 1. Balance sheet number 2 is going to look just like that, only for the month of February 2012. 229 2012, and we want to add percent of column to this. So we've got our percent of column, and we want to make sure that we've got our fonts and numbers right. We do. So let's memorize this. We do not want to replace it. We want a new one. Save in my group. There we go. Okay. Next we want balance sheet number 1. Let's go back to our reports. Memorized reports for me. Balance sheet number 1. Because now what we want to do is get every day for January. So if we do day like that, there we go. We have every single day for January, and it does say that we want to actually keep the report basis on this one, and we want to call this report January Transactions. Okay. So here's our January transactions. Every single day, memorize a new report. Save. Now we'll customize that report again so that we have our February transactions. And we need to rename our report, of course. February. There we go. We'll memorize this as a new one. Call February Transactions. Save in my group. So I've got my standard balance sheet for January, standard balance sheet for February. I've got my transactions list for January, transactions list for February. Now I can close out February or just go back to my memorized reports, balance sheet 1, because we're going to get our accounts payable reports and our accounts receivable reports. So the first thing we want is accounts payable. Down in liabilities, current. Double click on that. And before we forget, let's get some things changed here. Get rid of our date and time and report basis. And let's save this as January AP transactions. customize, click, click, click. Okay. Now we want to take a closer look here at this Randall. In the book it says Randall Leasing. Here it does not. And that would prompt us at my job to take a second look at either the invoice or the W-9 or both to make sure that we're paying the vendor correctly. And as you see here, it says just Randall, not Randall Transaction. So we've got that, and then we also want to take a look at transactions affecting accounts receivable. So we'll go through a similar procedure. We can close out January AP. Back to balance sheet 1, current assets, accounts receivable. Transactions by account. Let's customize this report. And again, we're going to remove these items. Call this January AR transactions. Extra footer line. I think I didn't do that on my AP. Oh well. Okay. And let's memorize this to our group. Okay. Then we want to take a quick look at Epic, because we want to look at transaction number 563. And here we have this invoice, Tax Consulting and Tax Services for Epic based in Dallas in the amount of $12,250. Let's come back to our January AR transactions and take a look at the payment down here on 127 to Venturity. And we'll see when this opens up that there are 4 open invoices, only one of which has been paid, and that's where that $17,500 comes from. So there we are, $17,500, and that is our entirety for Chapter 2 on this. Thank you.